Hi everyone, welcome to my first YouTube video. I'm very happy that you're here. So today we're going to go over an ICT concept strategy, which is absolutely mind-blowing, guys. I can't tell you how high the win rate is on the strategy, and basically what it can do for you in terms of win rate, and it really can give you significant profits. I know a lot of you guys really like ICT concepts and ICT and its teachings. It's great, but there's a lot of stuff there. So I decided to go through all of it and create a strategy that's more mechanical that you can follow along with. That doesn't, you don't need to have a ton of experience in the markets to be able to, use. Because at the end of the day, a lot of people trade in a discretionary way, which basically means that they use a lot of their own experience. This is what I think might happen. Whereas we prefer to trade in a more mechanical, systematic kind of way. So let's get into the system. So basically, we have three criteria for entry, and we need to use certain indicators. Okay, the first indicator you're going to need is the ICT midnight NY and GMT indicator. You can find that in indicators. You just look for midnight. Okay, and it is this one here by Liku, and you just click it onto your chart. I just have it set for the New York line, so you can untick this and you can make this whatever color you like. Okay, and now you can see we have each day's price action. Okay, so obviously between here and between here is the previous day. Okay, and then we're going to start looking for our criteria. Now, the other thing to remember is that you must have your time zone set to New York time, which is UTC -5. It makes things a lot easier to use with the system. So just click on the button down here in the bottom right of TradingView and make sure you are set to New York time, UTC -5. All right, so without further ado, let's have a look at the strategy. So what we're looking at is a break of the previous day's high or low. So that's a liquidity grab, right? So a lot of people have that marked up on their charts and they're looking to go long off of, for example, yesterday's high. Okay, they've got their buy stop sitting here, and it gets triggered and it goes directly the other way, and that's what we want to take advantage of. And a lot of people have stop losses sitting above these highs. So we look for a break of the previous day's high or low, or liquidity grab, in other words. And then once that happens, okay, we are looking for a break of structure in the other direction. So if this is, for example, your daily high of the previous day, we are looking for a liquidity grab of that high, okay, and then we're looking for price to come in the other direction and take out the low that took out this high. Okay, so for example, price had moved previously like so. Okay, we would want price to now come and break this higher low that was created before. It has to only be the most recent low that broke. Okay, and you'll see in the example what I mean by that. Then you're going to enter on the fair value gap. Now, those of you who have already studied ICT will know what a fair value gap is. It's basically an imbalance in the market, right? So what I mean by that is, if we've got three candles like so, we are looking for the gap that is created. Now, basically, it's where price has come to. So these are your wicks, for example. Okay, wick and a wick. Okay, not very good drawing skills. Please do excuse me. So we're looking at the gap between three candles. Okay, we're looking for where price has not yet come back to yet, which would be the gap between this wick and this wick. So here, make it a different color. is your fair value gap. Okay, so we would be looking for price after it has broken structure to come back into the fair value gap and flush down. Okay, and that is where our entry would be. Now everything takes place on the 3-minute time frame, so that is the time frame that we will be using. Again, guys, if you struggle with fair value gaps and you'd like me to make an entire video based on fair value gaps, I will do so for you. Just let me know down below in the comments. So yeah, let me just show you some examples of this. So this was actually today. There was actually a really good trade. So previous day, okay, between this is midnight of previous day and this is midnight of today. This is the highest point, right? Okay. Let's go back in time, shall we? Right, so price came, it tapped this here, set off a bunch of people's buy stops, and it took a bunch of people's stop losses out. Okay, and that is our first set of criteria that has been met. The liquidity has been grabbed from the previous day's highs. Okay, now what we're looking for is for where the low of the previous the low that caused the liquidity grab. So let's follow price. Okay, high high, high low, high high, high low, high high. Okay, and now in order for price to change character, we need price to break this higher low. Okay, can everybody see that clearly? I hope you can, because that is a very important concept. You do not want to be going, for example, this here is just a minor pullback, right? You want to look at significant swing structure. Okay, with practice you guys will be able to see this, but it is fairly simple to spot. Okay, so now we're looking for price to break that low. Okay, so price has broken the low now, and it doesn't want to stop for some reason. So what happens is it breaks. Okay, let me go back a little more. It breaks with quite a strong impulse. Okay, and as you can see as well, it's also good to note, once price took the previous day's high, it pretty much cascaded straight down. You can see the momentum is quite strong. So there was significant reaction. ICT refers to it as a displacement. That is a significant displacement. You can see it's about 17 pips, which is significant. What a lot of people do is they will create their entry criteria to only have a minimum of 15 pips displacement before they consider the entry. Okay, that's something you can add if you would like, right? So then we are looking for an entry, and that is of course with the fair value gap. Now if we go back in price, we can look for gaps in the market. Now you can see there is a gap here, okay, between this wick and this wick. We continue going up. We see there is the one that is further up, okay, and that is of course the one that we want to target. So we will enter at this point, place our stops just above the high, and we're going to target the low. Okay, on the higher time frame, this is a low. Okay, we want to target this area. Now what a lot of people do is take partials off at this area, and you can take partials off at each of these, but I recommend at least taking 2.5 risk reward on every trade. Now you can backtest it and figure out what works best for you, but this is what works best for me, and I always target the low. Okay, and as you can see, if you look at the zoomed out picture, high high, high low, high high, and now we're looking for this to get taken out. Okay, and that is what I would be targeting. Okay, so now let's see how the trade plays out. So now it took out that low for us, and here's where a lot of people would go break even, and there you go, trade is complete. for 4.4 risk reward. Now you get really good risk reward and the win rate is really high. That's why I love this strategy. So yeah, guys, I suggest you guys go and test it for yourself. Collect the data, go back as far as you can. Every day, go back through the day's price action and test it out. This actually works brilliantly well on indices, so US 30 and NASDAQ. But Euro USD also works really, really well. So yeah, guys, go and test it for yourself. It works extremely well. It's a game changer strategy. If you guys want to learn more, please do subscribe. I'm going to be posting a lot of free knowledge and information. I just want to see you guys succeed. I know how difficult this industry can be. If you guys want to join my community, the link will be in my bio, and there you can learn exactly how I trade, and you can see every single trade that I take, which I make it fully available to you guys before I take the trade. So yeah, thank you very much for watching, guys. Cheers.